We're here in Monte Carlo for the Rendezvous de Septembre. For AM-Best TV, I'm Richard Banks. And I'm joined now by John Cavanagh, Chairman and Co-Founder at Beat Capital. John, it's good to see you again. Welcome.
Thank you.
So there have been a lot of developments since we last spoke. Congratulations on the Amack Deal. What does that mean for Beat Capital?
Well, first of all, we're really thrilled about the deal. It's a very important milestone in our evolution. And what it means is that we've now got a permanent partner for the business. And if you look at the way that we've grown as an entity, we've obviously had a wonderful market to grow into. And because of that, we've used the private equity markets to facilitate that growth. And we had two private equity partners. We had Bain and Elliott, both of whom have been fantastic for us. But, by definition, private equity has to have an exit. And we wanted to try and get ahead of that. So that's precisely what we did. We went through a process really starting last September to try and find a partner that could work with us. And along came Amack. And they are, in fact, the perfect partner. Aside from the good cultural fit and the fact that we like the people there, they do what we do in America. They have a business that buys MGAs. They have a fronting business. We've got an international presence of substance. We're fairly fledgling in the United States. So when you bring all that together, it really is a very symbiotic partnership, and we're thrilled with it. And we've now got access to capital. It's a public business. Bain Capital have decided to come with us, and they've rolled their interest as well, which is testament to how they see the future between ourselves and Amack. So, it's a really exciting business, and the combined forces make it quite a powerhouse now. We've got aligned capital. I think we've got a great model to move forward into the future with.
That's great. So one of the topics that people have been talking about here is that lack of insurance startup companies. And one of the things that seems to have become apparent is that ambitious underwriters that might have gone previously and tried to raise capital in a hard market, looking more at MGAs. Tell us a bit about how important MGAs are in a hard market in particular.
Well, we saw a big gap in the market for the structure that we actually employed. London and Lloyd's in particular was always the place where entrepreneurs started businesses. I mean, it was a private capital market, and we were encouraging people to grow into business. But the last 25 years have conspired to make that very, very difficult. And it's regulation, overarching changes at Lloyd's, changing the capital model, changing the capital structure. All these things have conspired to make it very difficult. So we felt very strongly that if we set up a model that was a full-service turnkey platform for entrepreneurs, so we got them in to do what they do best, which is underwrite, and everything else came later, we felt that would be quite a worthy platform. And in fact, it has been. We started 12 businesses. They're all very successful. We're writing 800 million of premium now. We've built a platform for entrepreneurs. So I think we've plugged the gap in the market. I think Lloyd's quite like it because they get a look-see at monoline businesses that they would otherwise find difficult to start within the Lloyd's infrastructure. I think it does a lot of very good things. But we've got a lot of very successful young entrepreneurs now under our umbrella, and it's worked out very well.
Fantastic. Tell us a little bit about what you look for in a potential opportunity.
Yeah, we're very straightforward. So first and foremost, we like to see a track record, and that's always quite difficult to find because what we don't want people doing is taking data from their previous employers or current employer for that matter. So we're very, very particular about where we find our data from. But, through market resource and data at Lloyd's and things like that, we get a sense of their performance. We like to hear how they articulate pricing risk, that they're model-based in terms of their risk management. They can articulate their upside-downside characteristics, how they manage cross-cycle underwriting. I mean, we are at our very core an underwriting business. And we know for a fact that, if MGAs do not make money for their carrier, you won't have a carrier. So this is all very fundamental for us. So they're the things we look for. We want to understand how they cross-cycle manage their business. We like to see a technical underwriting approach. And most importantly of all, culture is very important to us. We need to work with these people day in, day out. We've got a very robust underwriting model. Our underwriting central team works very closely with the MGAs, so getting on is very important. So they're the things we look for. I mean, we've looked at 600 deals and we've done 12. So that sort of gives you some sense of, how selective we are.
So we're talking there about the supply side of things, demand side of things. How well geared up is the insurance industry to provide the solutions that clients are looking for?
Well, we can always do better. I mean, I actually think that if you look at the flow of premium into the specialty markets, I mean, what it's telling me is that the conventional insurance market is finding it very difficult to manage complex risk. So if you look at the influx of premium over the last 5 years into the E&S market in America particularly, I think we've absorbed that very well, and I think we found solutions for that, in a very sort of practical and professional way. And I think the MGA movement has played a very important part in that. I think it's sort of professionalised a certain segment of the market that was otherwise not there. So I think, we could always do better as a market. We've got lots of emerging risks coming through, like AI. Obviously, cyber is not really emerging now. It's part of the firmament, but that would be sort of very typical of how the market addresses a new need. And I think we broadly do that very well. And the nice thing about our market is that, the subscription-based nature of it means that we can all share that risk and that burden and get some consensus of how we're going to deal with it.
John, thank you very much indeed for joining us.
Not at all. You're welcome.
For Invest TV, I'm Richard Banks.